The 50-year reign of the US dollar just hit a wall. On June 9th, 2024, the secret pact that held the world economy together, the petrodollar, officially expired. But today, in December 2025, Saudi Arabia has done the unthinkable. As silver smashes through $70 an ounce, Riyadh is no longer just looking at gold. They are moving toward a petro-silver reality. With 11 million tons of new silver discovered in the kingdom and the US dollar losing its grip, are we witnessing the greatest wealth transfer in history? Stay tuned, because the system just broke. Let me take you back to 1974. The world was in chaos. The oil embargo had sent shockwaves through Western economies. Gas lines stretched for miles. Inflation was rampant. The United States had just abandoned the gold standard 3 years earlier, and the dollar was vulnerable, floating without an anchor. Then, Secretary of State Henry Kissinger orchestrated what would become one of the most consequential financial agreements in modern history. The deal was simple but revolutionary. Saudi Arabia would sell its oil exclusively in US dollars. In exchange, the United States would provide military protection, weapons, and security guarantees to the Saudi kingdom. Every nation that wanted oil, and every nation needed oil, would first have to acquire dollars. This created artificial demand for the US currency on a scale never seen before. Overnight, the dollar transformed from a currency in crisis to the undisputed king of global finance. It became the world's reserve currency not because of America's gold reserves or economic strength alone, but because it was backed by something even more valuable: black gold. The energy that powered every economy, every military, every transportation system on Earth could only be purchased with dollars. The system, known as the petrodollar, gave the United States an extraordinary privilege. America could print money to pay for imports, fund wars, and finance deficits, knowing that global demand for dollars would remain constant. Other nations had to earn dollars through exports and maintain massive dollar reserves. The United States could simply create them. For 50 years, this arrangement held. Through wars, recessions, technological revolutions, and shifting geopolitical landscapes, the petrodollar remained the foundation of American economic dominance. It allowed the U.S. to maintain the world's largest military, run persistent trade deficits, and impose financial sanctions that could cripple entire nations. The dollar was weaponized, and the world had no choice but to comply. But every empire has its expiration date. Every system, no matter how powerful, eventually faces the limits of its own contradictions. And on June 9th, 2024, something happened that barely made headlines in the mainstream media, yet signaled the beginning of the end for dollar supremacy. Saudi Arabia quietly refused to renew the petrodollar agreement. There was no dramatic announcement, no press conference, no global summit. The 50-year-old pact simply expired, and Saudi Arabia chose not to extend it. For the first time since 1974, the kingdom was free to sell its oil in any currency it chose: yuan, euros, rupees, or even gold and silver. The implications were staggering. The foundation of the dollar's global dominance had just cracked, but most people didn't notice. Stock markets continued. Business news moved on to other stories. The financial establishment dismissed it as a non-event, claiming the dollar was too entrenched to be displaced. They were wrong. Fast forward to today, December 2025, and the world looks radically different. The silver market has exploded. Prices that languished below $30 for years have rocketed past $70 an ounce. That represents a gain of over 140% in a single year. Silver has outperformed gold, outperformed stocks, outperformed real estate. It has become the surprise winner in a year of economic upheaval. And at the center of this silver surge stands Saudi Arabia, making moves that would have been unthinkable just 2 years ago. The kingdom is not just diversifying away from the dollar, it's actively building an alternative system with silver at its core. Let's understand what's really happening here. When the petrodollar agreement expired, Saudi Arabia didn't immediately abandon the dollar. Change of this magnitude doesn't happen overnight. Instead, the kingdom began a carefully orchestrated transition, quietly shifting its strategy while the world wasn't paying attention. Throughout 2024 and 2025, Saudi Arabia ramped up its purchases of silver ETFs, accumulating physical silver at a pace that startled precious metals analysts. The Saudi Sovereign Wealth Fund, the public investment fund, began taking significant positions in silver mining companies across the globe. From Canada to Peru, from Australia to Mexico, Saudi money started flowing into silver production. But why silver? Why not just stick with gold, the traditional safe haven? The answer lies in understanding Saudi Arabia's vision for its own future and the unique properties that make silver invaluable in the modern world. Gold is money. It always has been. It always will be. Gold is the ultimate store of value, the asset that has preserved wealth across millennia. But gold is primarily financial. Its industrial uses are limited. Silver, on the other hand, is both a monetary metal and an industrial powerhouse. And that dual nature makes it absolutely critical to the technological future Saudi Arabia is building. Under Crown Prince Mohammed bin Salman's Vision 2030, Saudi Arabia is attempting the most ambitious economic transformation in modern history. The kingdom is racing to diversify away from oil dependency before the world transitions to alternative energy. Massive projects are underway. Smart cities powered by renewable energy, electric vehicle manufacturing, advanced electronics production, and enormous solar installations. Every one of these technologies requires silver. Solar panels use silver for conductivity. Electric vehicles contain more silver than traditional cars. Electronics, batteries, medical devices, water purification systems, the list goes on. Silver has over 10,000 industrial applications. More than any other metal, it's the most conductive, most reflective, most thermally efficient element we know. In a high-tech future, silver isn't optional, it's essential. And Saudi Arabia just discovered they're sitting on one of the world's largest silver deposits. In the Najran region, geological surveys completed in late 2024 revealed an estimated 11 million tons of minerals, including massive quantities of silver, along with gold, copper, and zinc. To put that in perspective, 11 million tons of ore could contain hundreds of millions of ounces of silver, potentially making Saudi Arabia one of the top silver producers globally. This discovery changes everything. Saudi Arabia is no longer just the world's swing producer of oil. They're positioning to become a silver superpower. And they're doing it at exactly the moment when global silver supply is tightening and demand is exploding. The timing couldn't be more strategic. For decades, silver has been consumed faster than it's been mined. Industrial demand has consistently outstripped supply. Above-ground stockpiles have been drawn down. And now, just as demand is accelerating for green technologies and electronics, supply is hitting critical constraints. China, the world's largest silver producer and refiner, just announced that starting January 1st, 2026, 6 days from now, they will ban the export of certain antimony products and implement new restrictions on critical minerals, including silver. This isn't just about silver, it's about China asserting control over the resources essential to modern manufacturing. But the effect on silver markets will be immediate and dramatic. When China restricts exports, global supply shrinks, prices rise. And anyone who controls significant silver resources gains enormous strategic leverage. Saudi Arabia sees this clearly. They're not just buying silver as an investment. They're securing the raw materials for their own industrial revolution, while simultaneously positioning silver as a strategic asset that can challenge the dollar's dominance. Let's talk about the petro-silver concept, because this is where things get really interesting. The term might sound speculative, but the reality behind it is taking shape right now. Saudi Arabia isn't officially declaring a petro-silver standard, but their actions speak louder than any announcement. Throughout 2025, Saudi Arabia has been increasingly willing to accept payment for oil in currencies other than dollars. They've conducted oil sales in Chinese yuan, settled contracts in euros, and even discussed barter arrangements involving commodities and goods. But more significantly, they've begun accepting payment in physical precious metals. Reports from energy markets indicate that Saudi Arabia has agreed to long-term oil supply contracts with several nations where payment is partially or fully settled in gold and silver bullion. These deals are structured quietly, away from public scrutiny, but their existence represents a fundamental shift in how global energy is traded. Think about what this means. For 50 years, if you wanted Saudi oil, you needed dollars. Now, increasingly, you can pay in metals. And as the dollar weakens, as inflation erodes its purchasing power, as U.S. debt spirals beyond $35 trillion, as confidence in American fiscal responsibility deteriorates, countries are eager for alternatives. Silver offers several advantages as a payment mechanism. It's portable, it's divisible, it's universally recognized. It can't be printed, inflated, or manipulated by central banks. And unlike digital currencies, it can't be hacked, frozen, or seized remotely. In an increasingly unstable financial world, silver represents certainty. But there's another dimension to this story that makes Saudi Arabia's silver strategy even more compelling: the de-dollarization movement. The United States has weaponized the dollar for decades, using its control over the global financial system to impose sanctions, freeze assets, and exert political pressure. Countries from Russia to Iran to Venezuela have found themselves cut off from the dollar-based system, unable to conduct international trade or access their own reserves. This weaponization has backfired spectacularly. Rather than maintaining dollar dominance, it has motivated nations to build alternatives. The BRICS nations, Brazil, Russia, India, China, and South Africa, now expanded to include Saudi Arabia, the UAE, Egypt, Ethiopia, and Iran, are actively working to create payment systems that bypass the dollar entirely. One of the most significant developments is mBridge, a cross-border payment platform that allows participating central banks to settle international transactions directly in their own currencies using blockchain technology. Saudi Arabia joined mBridge in 2024, signaling their intent to reduce reliance on dollar-denominated transactions. But digital currencies, even those backed by central banks, still carry risks. They require trust in institutions, infrastructure, and technology. Physical silver, by contrast, is trustless. It requires no intermediary, no permission, no digital system. It simply is. And in a world where trust in institutions is declining, that matters. Saudi Arabia appears to be building a hybrid system, using modern technology for efficiency while anchoring value in physical assets for security. It's a sophisticated approach that combines the best of both worlds: digital transactions for speed and convenience, silver backing for stability and trust. Let's examine the broader economic context, because Saudi Arabia's move toward silver isn't happening in isolation. The global monetary system is under stress like never before. The United States is running annual deficits exceeding $2 trillion. The national debt grows by roughly $1 trillion every 100 days. Interest payments on that debt now exceed the entire defense budget. These are not sustainable trajectories. Meanwhile, inflation remains stubbornly elevated despite central bank claims of victory. The official numbers show inflation cooling, but anyone buying groceries, paying rent, or filling their gas tank knows the real story. Purchasing power continues to erode. Middle-class savings are being silently confiscated through currency debasement. In this environment, smart money is fleeing paper assets and seeking hard stores of value. Gold has performed well, but silver has absolutely exploded. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has compressed dramatically. For years, that ratio hovered above 80 to 1, sometimes reaching 100 to 1. Today, it's approaching 50 to 1, and some analysts believe it could drop to 30 to 1 or lower as silver continues outperforming. Why? Because silver was grotesquely undervalued relative to its utility and scarcity. For decades, silver was treated as an afterthought, a poor man's gold, an industrial metal with some monetary properties. But that perception is rapidly changing. Investors are waking up to the reality that silver is one of the most strategically important materials on Earth, and there isn't enough of it to meet future demand. Above ground, silver inventories have been declining for years. The warehouses that once held hundreds of millions of ounces now hold a fraction of that. Industrial consumption continues to increase. Investment demand has surged as people lose faith in fiat currencies, and mining production isn't keeping pace. Silver mining is challenging and expensive. Most silver comes as a byproduct of copper, lead, and zinc mining. Only about 30% of silver production comes from primary silver mines. This means silver supply is largely dependent on the economics of other metals. When copper prices are low, copper mines close, and silver production drops. There's no easy way to simply mine more silver when prices rise. This supply and flexibility creates the conditions for explosive price moves. And that's exactly what we're seeing. As demand has overwhelmed supply, prices have rocketed higher. But here's the critical point. We're likely still in the early stages of this move. Despite silver's dramatic gains this year, it remains below its inflation-adjusted all-time high from 1980, which would be around $150 in today's money. Saudi Arabia recognizes this massive upside potential. By accumulating silver now, they're positioning themselves to benefit from what could be a decade-long bull market. But they're also doing something more strategic. They're using silver to build optionality away from the dollar system. Imagine a scenario, perhaps just a few years from now, where Saudi Arabia backs a portion of its currency or its oil contracts with physical silver. Not a full silver standard, that would be too rigid for modern economies, but a partial backing that provides credibility and stability. Other nations, seeking to trade with Saudi Arabia for oil and looking for an alternative to the dollar, would need to acquire silver. Suddenly, silver becomes the new reserve asset, the new commodity that everyone needs to hold for international trade. The dynamics that made the dollar dominant for 50 years could shift to silver. Not completely, not immediately, but gradually, inexorably. And Saudi Arabia, with its massive silver reserves and production capacity, would be at the center of this new system. This is the petro-silver reality that's emerging. It's not a formal standard announced by decree. It's an organic evolution driven by economic incentives, geopolitical shifts, and the fundamental properties of silver itself. And it's happening right now, in real time, whether the mainstream financial world acknowledges it or not. Let's address the skeptics, because there are many who dismiss this entire narrative. They argue that the dollar is too entrenched, that no alternative exists with the depth and liquidity of dollar markets, that rumors of the dollar's demise have been greatly exaggerated. They're not entirely wrong. The dollar does have enormous advantages. U.S. Treasury markets are the deepest and most liquid in the world. The dollar is used in roughly 60% of global foreign exchange reserves and 88% of foreign exchange transactions. American military power and technological dominance reinforce dollar hegemony. These are real factors that won't disappear overnight. But the skeptics miss the forest for the trees. They're looking at today's snapshot while ignoring the trend line. They're focusing on the dollar's current dominance while dismissing the accelerating movement away from it. History shows that reserve currency status can shift quickly once confidence is lost. Sterling was the world's reserve currency until it wasn't. The transition happened faster than most expected. The question isn't whether the dollar will remain important. It will for years to come. The question is whether it will maintain its monopoly, its ability to force the world to hold dollars and conduct trade in dollars regardless of alternatives. And the answer to that question is increasingly clear: no. We're moving into a multipolar currency world, where multiple assets and currencies share reserve status. Gold will play a role, the yuan will play a role, the euro will play a role, and silver, with its unique combination of monetary and industrial properties, will play an increasingly important role. Saudi Arabia is positioning itself at the forefront of this transition. By accumulating silver, by developing domestic silver production, by accepting silver as payment for oil, and by building relationships with other nations through alternative payment systems, the kingdom is creating optionality. They're not burning bridges with the United States or completely abandoning the dollar. They're simply reducing their dependence, spreading their risk, and preparing for a future where American economic dominance is diminished. This is smart strategy. The world is changing. Power is diffusing. Economic growth is shifting to Asia and the Middle East. The Western-dominated financial system that emerged after World War II is giving way to something more distributed, more competitive, more reflective of today's economic realities. In this new world, silver shines. It's a bridge between East and West, between the monetary and the industrial, between the old system and the new. It's small enough to be practical for transactions, valuable enough to store wealth, and essential enough for technology that demand is guaranteed. These properties make it uniquely suited for the role it's beginning to play. Let's talk about what this means for the average person, because this isn't just a story about central banks and oil kingdoms. This is about the savings in your bank account, the purchasing power of your paycheck, and the security of your financial future. If the dollar's dominance is truly eroding, the implications are profound. Americans have enjoyed the exorbitant privilege of having the world's reserve currency. It's meant cheaper imports, lower interest rates, and the ability to run deficits that would be impossible for other nations. As that privilege diminishes, those benefits evaporate. Imports become more expensive. Interest rates rise because foreign demand for U.S. debt declines. Inflation accelerates as the dollar's purchasing power falls. The standard of living that Americans have taken for granted comes under pressure. This isn't speculation. It's the inevitable consequence of losing reserve currency status. For people in other countries, the dynamics differ, but the disruption is real. Nations that hold massive dollar reserves face losses as the dollar weakens. Trade relationships restructure around new currencies and payment systems. Economic power shifts. The rules of the game change. In this environment of uncertainty and transition, hard assets become essential. Real estate, productive businesses, commodities, and precious metals offer protection that paper currencies cannot. And among precious metals, silver offers unique advantages. Gold is expensive. At current prices, a single ounce costs over $2,500. That's out of reach for many people, and it's impractical for small transactions. Silver, at $70 an ounce, is accessible. You can accumulate it gradually, build a position over time, and use it practically if needed. Silver is also underowned relative to gold. Global gold holdings, including central bank reserves and private investment, are massive. Silver holdings are tiny by comparison. Most people own no silver at all. This means there's enormous room for growth as awareness spreads and demand increases. The industrial demand floor provides downside protection. Even if investment demand were to collapse, industrial consumption would support prices. Manufacturers need silver. They can't substitute it out of most applications without sacrificing performance. This creates persistent buying pressure that gold doesn't have, and the supply constraints create explosive upside potential. When demand exceeds supply in a market with limited inventory and inflexible production, prices can move dramatically. We've seen this in other commodities. Lithium prices multiplied several times over in recent years due to battery demand. Uranium prices surged as nuclear power gained favor. Silver could experience a similar trajectory. Some analysts are projecting silver prices of $100, $150, even $200 or more in the coming years. These aren't fringe predictions from conspiracy theorists. Major banks, investment firms, and commodity analysts are revising their silver forecasts upward as they recognize the supply-demand fundamentals. Saudi Arabia clearly believes in silver's upside. They're not accumulating it as a hedge or a small portfolio diversification. They're making it central to their economic strategy. When a nation with Saudi Arabia's resources, strategic position, and long-term planning horizon makes a bet this big, it's worth paying attention. The NEOM project perfectly encapsulates why Saudi Arabia needs silver and why they're bullish on its future value. NEOM is a planned $500 billion megacity in northwestern Saudi Arabia, designed to be powered entirely by renewable energy. It's one of the most ambitious urban development projects ever conceived, featuring advanced technology, artificial intelligence, robotics, and smart infrastructure throughout. Solar power is central to NEOM's energy strategy, and solar panels are silver intensive. Each panel requires about 20 grams of silver. A massive solar installation requires millions of ounces. As Saudi Arabia builds NEOM and other renewable energy projects across the kingdom, their domestic silver consumption will skyrocket. But they're not just consumers. With the Najran discovery and other mineral deposits being explored, Saudi Arabia can be both a major producer and a major consumer. They can secure their own supply chain, reduce dependence on imports, and even become a silver exporter to the region. This vertical integration, from mining to industrial use to monetary strategy, gives Saudi Arabia unprecedented control over silver markets. They can influence prices, ensure availability for their own needs, and use silver as a strategic tool in international relations. It's a powerful position. The mBridge payment system deserves more attention because it represents the infrastructure through which petro-silver transactions can flow efficiently. Launched as a collaboration between central banks in China, Thailand, the UAE, and Saudi Arabia, with support from the Bank for International Settlements, mBridge allows instant, low-cost cross-border payments using central bank digital currencies. Here's how it could work with silver. Country A wants to buy oil from Saudi Arabia. Rather than converting their currency to dollars, buying the oil, and dealing with dollar-denominated settlement, they could use mBridge to transfer their currency directly to Saudi Arabia in exchange for digital tokens backed by physical silver held in Saudi vaults. Saudi Arabia receives payment in an asset they value. Country A avoids dollar exposure, and the transaction settles in seconds rather than days. This isn't science fiction. The technology exists. The political will exists. The economic incentives exist. The only thing preventing widespread adoption is inertia and the entrenched interests that benefit from the current system. But inertia can be overcome, and entrenched interests can be disrupted. It just takes time and the right catalyst. The dollar's weaponization has been that catalyst. When the United States froze Russian central bank reserves after the Ukraine invasion, every nation on earth took notice. If Russia's $600 billion in reserves could be seized with the stroke of a pen, whose reserves are safe? The answer, increasingly, is nobody's. This realization has accelerated de-dollarization efforts dramatically. Nations are diversifying reserves into gold, settling trade in local currencies, and building alternative payment infrastructure. Saudi Arabia, with its historical ties to the United States, might seem an unlikely leader in this movement. But the kingdom is pragmatic. They see the writing on the wall. American reliability as a partner has declined. American focus is shifting away from the Middle East, and Saudi Arabia needs to secure its own interests in a changing world. Silver provides that security. It can't be frozen by sanctions. It can't be printed away by inflation. It can't be hacked or deleted. It exists physically, and whoever holds it controls it. For a nation navigating increasingly complex geopolitical waters, that certainty is invaluable. We're now 6 days away from China's export restrictions taking effect. On January 1st, 2026, Chinese silver exports will be significantly curtailed. This is a massive supply shock coming at exactly the wrong time. Demand is surging. Supply is already tight, and the world's largest producer is restricting exports. What happens to prices when supply suddenly drops and demand remains high? Basic economics gives us the answer. Prices explode. We could see silver breach $100 an ounce in the first half of 2026. If industrial demand remains strong and investment demand continues to grow, prices could go much higher. But here's the critical insight. This is not just a trading opportunity or a short-term price spike. This is the beginning of a structural shift in how the global economy values and uses silver. For decades, silver was abundant and cheap relative to its utility. That era is ending. We're entering a period where silver scarcity becomes a constraint on technological progress, where nations compete for supply, and where strategic reserves are built. In this new reality, Saudi Arabia's silver strategy looks brilliant. They've secured massive reserves through discovery. They're acquiring production assets globally. They're accumulating physical metal, and they're positioning silver as an alternative to dollar dependence. They're ahead of the curve, and that positioning will generate enormous value. Think about the wealth transfer that's occurring. Investors who recognized silver's potential early and accumulated at $20, $30, or $40 an ounce are seeing their purchasing power multiply. Those who ignored silver or dismissed it as a relic are watching their dollar savings erode. This is one of the largest wealth transfers in modern history, happening quietly while most people focus on stocks, crypto, or real estate. Saudi Arabia, by positioning itself at the center of this transfer, is securing its economic future for generations. They're not just diversifying from oil, they're establishing themselves as essential to the next industrial revolution. Every electric vehicle, every solar panel, every advanced electronic device requires materials that Saudi Arabia increasingly controls. That's real power. The United States, meanwhile, faces a dilemma. Do they recognize the threat to dollar dominance and take action? Do they try to compete by building up their own strategic mineral reserves? Or do they continue on the current path, pretending that monetary policy can solve structural economic problems? So far, the response has been inadequate. There's been some talk of rebuilding domestic mining capacity, some discussion of critical mineral supply chains, but no coherent strategy to address the fundamental challenge. The United States is running massive deficits, debasing its currency, and losing the respect and trust that made the dollar dominant. Unless these issues are addressed, the decline will continue. But here's the thing. For individuals, it doesn't matter whether governments get their act together. You can protect yourself regardless of what policymakers do. You can position your own finances for this transition. You can accumulate hard assets, reduce dollar exposure, and benefit from the same trends that Saudi Arabia is leveraging. Silver represents one of the most asymmetric opportunities available today. The downside is limited by industrial demand and production costs. Miners won't sell below their cost of production for long. Industrial users will pay what they must to secure supply. This creates a floor under prices. But the upside is potentially enormous. If silver reclaims its historical monetary role, if it becomes central to energy trade, if supply shortages intensify, prices could multiply several times from current levels. Risk-reward profiles. This compelling are rare. When they appear, paying attention makes sense. Of course, silver isn't without challenges. Price volatility can be extreme. Storage and security require consideration. Liquidity can be an issue during market dislocations. Transaction costs when buying and selling physical metal can be significant. These are real factors that require thoughtful planning. But compared to the risks of remaining fully exposed to a weakening fiat currency, these challenges are manageable. Diversification is key. Silver shouldn't be your entire portfolio, but it should be a meaningful position for most people given the current environment. As we approach 2026, multiple catalysts are converging. China's export restrictions begin in days. Saudi Arabia's silver production is ramping up. BRICS nations are expanding their alternative payment systems. U.S. debt continues spiraling. Inflation remains elevated despite official claims. Geopolitical tensions are rising. Technology demand for silver is accelerating. Each of these factors individually would support higher silver prices. Together, they create the conditions for a historic bull market. And Saudi Arabia is positioned perfectly to benefit from every one of them. Let's consider the endgame. Where does this lead? In 5 years, in 10 years, what does the global monetary system look like if current trends continue? The dollar remains important, but no longer dominant. International trade is conducted in multiple currencies.